Welcome to Fasken's 14th consecutive mining series. My name is Michael Barassa. I'm part of the Fasken Global Mining Group, and I'm also a partner here in the Toronto office. Today's webinar, They Come from the Land Down Under, Why Quebec is a Hotspot for Australian Mining Companies. It's the 5th in our series and 14 of the seminars that we're going to be holding. A link to all of our PDAC seminar series and events can be found underneath the video window. And also, please refer to the slide on your screen for some housekeeping items. And with that, I'm going to turn it over to my colleague, Frank Mariage, the moderator for today's session. He's going to introduce today's panel. Thank you.
Thanks, Michael. So, as a practitioner in the province of Quebec, obviously, firsthand, I see the presence of Australian mining companies in the province in Quebec. And, when we started our PDAC, Fasken PDAC Seminar Series Committee, and myself being on the committee, I said to myself, I definitely have to organize something about to discuss this aspect. And then, obviously, there was a spark for me and saying to convince me that I definitely had to do something was a famous Globe and Mail article that was published in October of 2023 that was titled, Canada wants to be a global leader in critical minerals. Why is Australia eating our lunch? So obviously that kind of got me, as a proud Canadian, got me a little pumped. And I said, you know what? Let's talk about it. So I'm going to read just a couple of sections of this article. Bear with me; it's not very long, and then we'll kick it off. So, there's a couple of things that are said in the article that, here's a quote: Canada's politicians talk a big game in critical minerals, but the list of domestic companies benefiting from the mining or refining of energy transition metals such as nickel, cobalt, lithium, and aluminum is short. Here's a quote from Pierre Lassonde in this article: "We've hollowed out one of the key industries in Canada." That was getting me going. And here's the final straw. This is a quote: "Australia beats us in everything. It beats us in soccer, in rugby, in swimming. I've got enough Aussie friends up here, and I guess I'm tired of it," said Doug Pollitt, veteran mining analyst with Toronto-based brokerage firm Pollitt & Co. "But we can beat them in mining. We were the global capital market hub because we're close to New York, we're closer to London, and of late, they're just kicking our ass." That's a quote, not my language. So obviously, I said to myself, this is a negative aspect, this is a negative article, but I think there's the positive side of it, and that's the objective of today's panel. And, we learned, yesterday we had a panel with the Fraser Institute who released their annual survey on mining, and, we learned a couple of interesting things. In 2021, the mining sector employed 665,000 Canadians. That's 61 directly and 39% directly. That's huge. They paid an annual average salary of $134,000 per job, nearly twice the all-industry average of $69,000. The industry spent $14.4 billion on capital investment, which accounts for 5% of the Canadian total. And they exported $130.4 billion worth of minerals. That's pretty significant. So with today's panel, with the mining industry and its importance in Canada, we're going to explore the positive aspects of this presence from Australian companies in Canada. And with that, I'd like to introduce our guest panelist. Let me start off with Christian Calabrese, who is Director, Investment Banking at Canaccord Genuity. Christian is a director of the Sydney-based investment banking team at Canaccord Genuity, an independent global investment banking firm which has strong track record of partnering with clients in the global metals and mining sector. Christian has extensive experience in advising corporate clients on all aspects of M&A and capital market transactions. In recent years, Christian has advised on Australian dollars 4 billion worth of successful transactions in the mining and critical mineral sectors, including numerous transactions involving Canadian companies and projects. Christian, thank you for accepting my invitation and welcome to the panel.
Thank you, Frank. Thank you for having me.
Our second guest, Mr. Chris Evans, Chief Executive Officer, Winsome Resources. Chris has a strong lithium and civil engineering background with 20 years demonstrated success in managing large-scale construction and mining development projects and operations across various commodities. As Chief Executive Officer, Chris was responsible for building and bringing into operation the Pilgongora lithium mine as Chief Operating Officer, and processing facility, which was subsequently acquired by Pilabara Minerals in a deal valued at more than $200 million. In this role, and also in his subsequent role as Managing Director of an ASX-listed lithium development company, Mr. Evans was involved in establishing and maintaining key relationship with project finance and offtake partners. Chris has been Managing Director of Winsome Resources since it first listed on the ASX in November 2021. Mr. Evans holds a Master's of Engineering Science Construction Management, University of New South Wales, a Bachelor of Engineering with honors from Civil Engineering from the University of New South Wales, and is a graduate of the Australian Institute of Company Directors. Chris, welcome to the panel. Thank you for having accepted my invitation.
Thank you, Frank. Pleasure.
Next panelist, Mr. Jean-Marc Lulin, who is President and Chief Executive Officer of Azimut Exploration. As President and CEO of Azimut, Jean-Marc Lulin has opened various regions of Quebec to exploration for a wide range of commodities, leveraging innovative targeting methodologies and partnership. His approach and success led to his recognition as a leading player in the province. Prior engagement include President and CEO of Channel Resources, Chief Geologist for SOQUEM, and the Vior-Mazarin Group, and geologist for BRGM. He played an instrumental role in the initial wave of mining exploration in Burkina Faso. Jean-Marc earned a PhD in economic geology from the University d'Orléans, France. Bonjour, Jean-Marc. Thank you for your presence, and thank you for having accepted my invitation.
Thank you.
And last but not least, my colleague and partner, Jean-Philippe Côté. Jean-Philippe is a member of our corporate commercial group at Fasken and practicing corporate securities and mining. He focuses his practice on corporate finance and mergers and acquisitions with a particular emphasis on the mining sector. Over the course of his career, Jean-Philippe has developed a particular expertise in relation to equity financings and investments involving the issuance of flow-through shares by exploration stage mining companies for projects across Canada. Jean-Philippe, thank you for having accepted my invitation. I appreciate your presence.
Thanks for the invitation.
Before we get into it, just to let the audience know, we'll have a 10 to 15 minute Q&A for those who have questions for our panelists. So please, you can fire those away via the channel, the chat function or the Q&A button on your screen, and I'll do my best to ask the questions to our panelists. So let's get things started. Chris, let's talk about Winsome. You've been operating in Quebec for a couple of years now, more than that, I think. And, you've been a good success story, I would say. Talk to us about Winsome, its vision, and what made you come to Quebec, and what's been your experience thus far working in the jurisdiction, and why you think you're having such good exploration success.
Thank you very much, Frank. And first of all, can I say I find those previous quotes you read out shocking. Some of my best friends are Canadians, so I think the purpose of this panel is great, so that we can refute those and talk about the positive relationships between Australia and Canada in this particularly this critical mineral space. As a quick summary for Winsome, we listed on the ASX, and we listed about 2.5 years ago. We're entirely focused on hard rock lithium mining in Quebec. Since we listed 2.5 years ago, we raised $18 million on the ASX then, and due to the success we've had since that time in exploration, we've managed to raise another $80+ million, all of which has gone into the ground essentially in Quebec. But the story, and we remain focused on hard rock lithium entirely in Quebec, largely most of the work around our Adina project, where we put out a maiden resource in December last year, 59 million tonnes at 1.12% lithium oxide. But the background story is perhaps quite interesting, and what led to us being in Quebec. And that is probably first my experience. So I was, as you said at the beginning, I was Chief Operating Officer of Altura Mining. And at Altura, I took the Pilgongora project, which is a hard rock lithium project in Western Australia, right from scoping study stage into production. And that was between about 2015 and 2019. And I learned a whole lot out of that. how to do some things well and what should be changed if I was ever to build another lithium mine again. And then after that, I was managing director of another ASX company that is now called Leo Lithium, and it had the Goulamina project in Mali in West Africa. And I took that up to the definitive feasibility study stage. And then when COVID hit for various reasons, I finished at that job, and I was looking around for something new. And the experience that I'd had at that stage was that a lot had happened in Western Australia, and to find a good value project would be more difficult, although they're still out there. Western Australia, Australia, like Canada, is a huge territory. Africa has some lithium projects in it. However, they can be very challenging for various geopolitical reasons. And so I got to thinking that the world needs another tier 1 lithium jurisdiction to sort of challenge the almost supremacy that Australia was getting in the hard rock space. So when I looked around, I quickly came across some properties in Quebec, previously owned by another ASX company that had drilled several of them, discovered some lithium, but hadn't really followed up with it, mainly due to the crash in lithium prices around 2018-19. So I had a look at the time, I knew very little about Quebec, but when I had a look at things like the Fraser Institute publications, the strong mining culture that was there, the huge amount of support we get from the government, from not only a tax perspective, but from a regulatory perspective as well, I thought this is going to be, or this has the potential to be, the next tier 1 jurisdiction for lithium. And the other interesting thing at the time is that, unfortunately, there hadn't been any success stories in Quebec. The Nemaska lithium project and North American lithium had both had some struggles. So I thought this is the prime time to get into lithium in Quebec. And since that time, many others have jumped in, partly built on the success of that Patriot Battery Metals have had, and that we've had in very quickly building up globally significant lithium resources.
Okay, pretty interesting. So what's been your experience so far in terms of working? You mentioned the quality of the expertise, quality of the workforce. Talk to us about that.
It was very, very, very seamless moving into Quebec. Now, I'm based in Western Australia, although I do spend a significant portion of the year in Quebec. And not knowing really a single person in Quebec when I first came over, because of the mining resources that are available, the mining culture, and the rich history Quebec has in that sector, I was quickly able to find a very strong country manager, Carl Camartain, who leads Winsome in Quebec. He's a geologist by background, but happened to have lithium experience. And from there, we slowly built a team. But the drilling resources were there. The government support was there, as in we could immediately start getting our 38.5% tax rebates back on eligible expenditure in the ground. The regulations were relatively easy to adhere to and understand, as in getting drilling permits, for example. It's really no different to Western Australia or any other tier 1 jurisdiction. So it all seemed to fall into place very quickly. And then momentum built. We went from only having really Carl and I in Quebec as full-time employees to now having about 30 staff and 60 or 70 contractors on site with our 5 drill rigs. So it's really built very quickly over 2 years, and you wouldn't be able to do that in many jurisdictions. I think it's a testament to, as I say, the mining culture here and the resources that are available to us.
That's interesting. The proud Canadian in me is happy to hear you say that, Chris. You talked about government support, not just from a tax perspective. So did that surprise you? Was that an unexpected surprise for you when you were trying to discover this jurisdiction?
Yes, it did. I'd have to say, although Western Australia also has a rich mining history, these days the government tends to have a laissez-faire attitude and sort of really step back and leave mining policy and developments in the hands of developers. It's really up to mining companies to drive forward initiatives, either in terms of infrastructure or regulatory changes, are all driven by industry. Whereas the Quebec government seems, mainly the provincial government, but also the federal government, seems to be much more active in this space and a participant. And you see that through SOQUEM and Investment Quebec as well. They actively participate in the mining space, and that flows on to the government. At least many outlets in the government to be able to speak to.
Yeah, that's a good observation. Well, thanks for that. Thanks for that, Chris. Let's move on to your neighbor from Medina. Let's move on to Jean-Marc, and let's talk about Azimut Exploration. Jean-Marc, you've been exploring the area for what, 20 years now, and Azimut's one of the biggest mining claim holders in the province. You gave me the number the other day, but I forgot, and it's pretty staggering. So you obviously know the terrain fairly well, having explored and opened up many camps as per your bio. So please talk to us a bit about Azimut, and how, from your perspective, what's been the impact, the presence of Australian miners? What impact have they had, in your opinion, and your experience in collaborating and cooperating with them? And I know this is a subject that is dear to you. Chris mentioned it in his presentation. I'd like you to talk to. I know it's something you're passionate about. I'd like you to talk to us about Quebec's lithium potential. So, Jean-Marc.
Okay. Yeah. Three sides. Okay. First, regarding the number of claims, Azimut holds 17,000 claims, covering more or less 8,400 square kilometers. We have the largest mineral exploration portfolio. Saying that, our core business is target generation using the world-class Quebec governmental database. It's a fairly unique situation. It's a highly accessible, free database, high quality, covering almost the entire surface area of Quebec, which is a 1.6 million square kilometer province. Our key driver is advanced data processing at the scale of Quebec to acquire major targets in underexplored regions. And of course, this led us to develop a strong interest in the James Bay region over the past 20 years up to now. We are focusing on few key commodities, gold, copper, nickel, and now lithium. The business plan is very, very simple. We're using this generative capability to attract key partners to invest on the properties we have generated over the past 20 years. We have attracted, we have formed 38 option and strategic agreements with 20 different companies. In most cases, large companies like RTZ, KGHM, IAMGold, Newmont, etc. At current time, we have 5 properties under agreement, under option agreements, and 7 under joint ventures. We are also advancing on our own several properties. Finally, this strategy, we try to better address the overall exploration risk. We capitalize to reduce as much as possible the share dilution rates through time. Azimut has been formed 38 years ago, and we only have 85 million shares outstanding with no rollback. We capitalize to really create a value per share. This is a key driver for us. Okay, saying that, regarding the lithium boom, the current lithium boom, at start, it was really for me like a subject of astonishment and curiosity. I was not really taking care of it. But that changed into a big wake-up call after seeing the progress made by few explorers, including Winsome, of course, on Patriot battery metal. We wake up. We saw we have been witness of the dramatic progress made by few companies in the last 3 to 4 years, and more importantly, about their confidence about our potential, about the lithium potential existing in Quebec. Again, it's a wake-up call for us. They said, "Hey, you have a world-class potential." And this led us to pay a lot of attention to this potential. It's not only a wake-up call for us, but also for the other Quebec-based companies working in Quebec since a long time. They have adjusted their exploration strategy to match the challenge on big part of the game. Saying that, of course, we are not seeing Australian companies as competitors, as we are seeing them as any other company, but we see them as potential partners, not really competitors, but potentially partners. We're not seeing Australians as a threat for our business, definitively not. Now, the last part of your question, which is really, in my view, really the dramatic change in Quebec. The James Bay region itself is emerging clearly as a world-class mineral province for lithium, with a comparable feature with Western Australia. It's very, very clear to us now. We can list the key criteria for maybe 2 or 3 minutes. We're dealing with the same mineral deposit type, which means LCT pegmatite, including coarse pegmatite, which is a key criteria for the quality of the spodumene, with low iron content. We're dealing with the same age, Archean, dealing with the same type of rocks, the same metamorphic context, also the same kind of age relative to the tectonic events. So the overall geologic features are very, very comparable. Again, the geometry of the deposit on most of them is comparable. We're dealing with flat-lying or shallow dipping ore bodies. It's the same case in most of the large Australian deposits. The grade range is also very comparable. We are talking about 1 to 1.5% Le2O, except with the outlier green bushes, which is presenting a 2.25% lithium oxide grade. The main difference, and there is a big difference, it's the exploration maturity. In Quebec, we have at least several thousand of unsampled outcropping pegmatite across a 1,200 kilometer long, highly prospective tectonic boundary. This is making the big difference with Western Australia. Deposits in Australia are related to 2 regions, Pilbara and Yilgarn. But in the James Bay region, we have a huge region which is still at a very early exploration stage. And this is making a difference. It's not to say that there is no possibility of discovering new deposits in Australia, but we are really at a very, very early exploration stage in Quebec with a huge potential. And the 3 to 4 years, the last 3 to 4 years, are just demonstrating that eventually we may reach the same level of resource and reserve known in Australia. Finally, the size of the prospective region is very impressive in Quebec. This is probably the best, one of the best assets we have for the future. We will discover much more.
Interesting, Jean-Marc. I mean, one of my takeaways from what you said the term wake-up call. And because of the successes that companies like Winsome were having, and you didn't see that as a threat, but it was an awakening and a wake-up call for you. So that's a very positive thing, I think.
Yes.
And my other takeaway of what you're saying, it's just the beginning, right? It's just the beginning. So, and Chris, how does that make you react in terms of what Jean-Marc just said about the potential of the region? I presume you agree with that.
Absolutely. I completely agree with that. And it feels very similar to what Western Australia did back in 2015. The start, Greenbushes was already there. Mount Catlin was there to an extent, but it was really the time for growth. And it was great to be one of the players involved in that growth at the time. And it now feels, again, like we're amongst that now in Quebec.
Yeah. Well, listen, obviously, good success means you raise some money to get there. And I think it's a good segue to talk with Christian from Canaccord. Chris, Canaccord, Genuity is a big player in mining financing. It's true in both of our jurisdictions. As an Australian investment banker, working extensively with ASX-listed mining companies, I'd like you to talk to us about the investment climate in Australia for these ASX-listed companies operating in Canada. What's been your experience in accompanying them in their financing efforts, and why you think they've had so much success?
Thanks very much for your question, Frank. So just in terms of Canaccord Genuity, as many of you would be aware, we are a Canadian head in the Sydney-based team, the investment banking team here. So we're very well versed on the cross-border elements which we're discussing here between Australia and Canada. And coming back to your question, Frank, just in terms of the ASX operating environment in Canada at this juncture, there's around about 50 to 60 ASX companies with projects or subsidiaries in Canada at present. So they're companies clearly in the lithium space, of which Chris forms part of at Winsome Resources, but also operating in precious metals, base metals, and uranium, these sorts of critical mineral sectors as well. And a lot of those companies have early stage exploration assets right up to production stage assets, and varying degrees in terms of those projects through the development cycle. Just on the ASX companies operating in Canada, and while we've seen a lot of those companies having tremendous success in raising finance in recent years, from our perspective, there's probably a few primary reasons for this. Number one, in terms of Canada as a jurisdiction, there's a certain appreciation amongst Australian institutional investors here of the operating environment in Canada. And I think Chris at Winsome Resources mentioned as much in terms of a lot of Australian entrepreneurs and promoter groups moving up to Canada as a natural adjunct and extension of what they've done down here in the Australian sector, specifically the West Australian hard rock sector. In terms of the ability to raise finance, what we've seen here is that the ASX here in Australia has implemented mechanisms whereby raising equity finance can be done quite quickly and swiftly with certain mechanisms. As many would be aware, a single tranche placement here on the ASX can be done in a matter of days or weeks, and there's no 4-month hold period, for example, for those shares vis-a-vis the certain transaction structures in Canada. And moreover, there's certainly been a strong level of interest from Australian investors in Canada, just given that a lot of Australian investors understand mining, and it's certainly part of the DNA down here. There's a whole host of specific mining funds here in Australia, which have dedicated mining investment teams, and we can talk about the superannuation sector shortly, which is similar to the Canadian pension fund system. But those mining investors down here in Australia have specific mining teams and specific teams dedicated to ASX mining equities. And there's also the generalist pool of capital as well down here in Australia to support companies on the ASX, such as Winsome. So that's sort of a bit of a high-level summary, Frank, of why I've seen the success that we have over the last 18 to 24 months.
there's so many follow-up questions I think I would have from that. And the first one that comes to mind, you talked about institutional support, talked about pension funds. We have two very prominent figures from the mining space in Canada who've been very vocal in the last couple of weeks, being Robert Justra and Pierre Lassonde, being very critical of Canadian pension funds and the lack of support for their investments in Canada, and wanting governments to step in and kind of force these funds to take positions and better support Canadian companies and Canadian mining. Can you talk to us a bit about the climate for like these funds in Australia and how that came to be? Is it always been like that? It was just a natural? Was there some kind of government intervention that made it happen? I'm very interested because obviously, like I just mentioned, pretty critical here on this issue.
Thanks, Frank. No, it's certainly a trend that we've seen over the last few years play out and that we foresee to continue in the next 5 to 10 years. So at this point in time, I believe there's around about $4 trillion worth of funds held by superannuation funds down here in Australia. And there's around about 15 to 20 key superannuation funds which effectively hold the vast majority of that $4 trillion at the current juncture. In terms of where people foresee that funds under management going over the next 10 to 15 years, I think over the next 15 years, that $4 trillion is expected to grow upwards of $9 or $10 trillion. So that's a huge amount of capital which needs to be deployed. Now, naturally, a lot of that money is deployed into Australian infrastructure projects, unlisted private investments, but a large proportion of that capital needs to be distributed through ASX equities. And as a sort of adjunct to that, the Australian mining industry is obviously a key proportion of the overall ASX. I think around about 30% of the total ASX market capitalisation is attributable to mining and energy companies. So naturally, a huge pool of that superannuation money needs to be directed into ASX equities. So that is a huge pool of capital that ASX companies tap into. Moreover, there is a smaller portion of that capital that can be deployed into offshore equities, but the vast majority of that capital will need to be deployed into ASX equities. Now, these superannuation funds also have specific mining investment teams as well. So they're sort of an investment house sitting within the superannuation fund, which have technical analysts undertaking due diligence on opportunities. And at any given stage, one of these investment vehicles, I think about it, an AusSuper or UniSuper, these sorts of groups can invest hundreds of millions of dollars into any stock at sort of any given stage post due diligence investigations. So that's a dynamic that's played out in recent years, and certainly we foresee that continuing moving forward.
Wow, mind-blowing numbers, honestly. One of the things we're hearing too in Canada is, given the amount of support for mining through the ASX in Australia and the current lack of support for Canadian miners, starting to hear more and more about Canadian companies wanting to list on the ASX. Have you seen a lot of that? What's the noise on the street in Australia in that regard?
Yeah, absolutely, Frank. Over the last 12 to 18 months, here at Canaccord in Australia, we've probably had inbounds of almost one or two companies from the TSX a week query a potential ASX listing an ASX dual listing alternative. And some of those have played out in practice. I think we've mentioned Patriot Battery Metals. They've obviously affected a dual listing. Some other smaller exploration companies have gone down that route. And most recently, we saw Capstone Copper, one of Canada's largest copper producers, list on the ASX by virtue of a foreign exempt listing alternative. So that is a dynamic that we've seen play out certainly over the last 12 to 18 months, which is interesting. And a lot of those companies are coming down to us here in Australia wanting to access the exchange, hopefully as a means of enhancing valuation prospects, but moreover, just enhance their ability to raise equity efficiently. Now, going back 5 or 6 years ago, the shoe was on the other foot, whereby a lot of ASX companies were thinking about a TSX listing alternative. So it's really hard to know if there's any structural elements to this dynamic which is playing out, or moreover, if it's just a broader market dynamic, which sort of comes and goes with time. But that will obviously remain to be seen over the next year or two.
Yeah, I agree. Last question for you. Obviously, you've accompanied quite a few ASX-listed companies through what we call structured flow-through or flow-through financing in Canada. Can you talk to us a bit about that, your experience and the numbers? What numbers were? Somebody told me, I think last year in 2023, structured flow-through or charity flow-through, as people referred to, represented 90% of the flow-through market in Canada, which is quite astonishing. So why don't you talk to us about that from your perspective as an iBank from Australia and company?
Frank, and Chris Sevens at Winsome's on the line here as well, and we've utilised here at Canaccord the flow-through structure very efficiently for Winsome, having raised probably close to $50 or $60 million for Winsome in the past 12 months, utilising that mechanism. So just in terms of some broad-based numbers, I think around about $500 million of flow-through money front-end capital has been raised over the last 18 months for ASX companies operating in Canada across 30 to 40 transactions. So that is quite a lot of capital vis-a-vis what's been raised through the flow-through charity elements in Canada. Just on the actual mechanism itself, this is fairly new to the ASX. So going back 3 or 4 years ago, Australian investors really didn't know too much about the flow-through regime. But in effect, brokers in conjunction with legal counsel have worked through a structure which is fairly similar to TSX type elements, but probably a little bit more investor friendly. So just in terms of the overall process, companies such as Winsome undertake a donor marketing process over the course of 1 to 2 weeks. In effect, the donor provider, such as a Pear Tree, and there's obviously quite a few providers of that nature, have a certain level of comfort over the front end requirement for the capital raise, and we as the Australian broker in effect look to procure demand for the back end. Now that back end quantum is obviously a function of the multiplier. Now clearly Québec lithium companies have a fantastic multiplier of almost 2 times. So that back end is procured. The demand for the back end is procured by the Australian broker, and we effect the transaction through an Australian block trade transaction. So in simple terms, if Winsome was raising, let's call it $20 million through a flow-through mechanism, and the multiplier was 2 times, we as the Australian broker would be looking at undertaking a $10 million block trade transaction. And you might ask, who are the buyers of that block trade? Primarily, it's Australian institutional investors. There are some offshore institutional investors that do participate as well. And certainly, in addition to institutional investors, it's the Australian retail and high net worth market as well. And just coming back to the investor-friendly nature of these transactions, the structure implemented will enable shares to be freely tradable by those investors in a matter of days following announcement of the transaction. So there is no hold period. There's no 4-month hold period for those investors. So it is investor friendly. Clearly, investors like that the company is avoiding dilution, which is beneficial for existing shareholders. And moreover, investors have shares which are freely tradable in the marketplace. But I might hand it over to Chris Evans on his thoughts around the flow-through structure, given that we've worked closely with Chris over the last 12 to 18 months on these initiatives.
Thanks, Christian. Yeah, as you say, I think it's about 50 million in flow-through money we've raised. It's ideal for us given our main business is exploration and it's got to be spent mostly on exploration work in the ground. It's our very anti-dilutive, and the good thing I think from investors in Australia is that they know what we're going to spend it on, because it has to be spent on the ground exploration or drilling or very closely related activities. So we're not going to be waiting on corporate overheads or leading a lifestyle company that some people worry about. It's going to go into the ground, and it has to be done by the end of the following calendar year. So there's a finite time frame on it as well. So it really drives you to do exploration and drive discoveries.
Yeah, and again, getting back to the introductory remarks, wanting to put a positive tone on collaboration with Australian miners. All this money that you raise, these impressive numbers, this is money that's spent in Canada, right? And let's not forget that. So
exactly.
Very interesting. So I'm going to take it over, move it over to my colleague, Jean-Philippe. JP and I work obviously extensively together. We've been working, for the last couple of years. I've accompanied quite a few Australian miners into Canada. And this issue has come up. And JP, we've heard from Christians on the importance of structured financing, flow-through financing as represented for ASX-listed companies such as Winsome. Let's talk about the legal aspects behind it, right? Because obviously there's structure issues that we need to consider that as Canadian Council, as Canadian ASX companies need to consider when they do these types of financing. So talk to us a bit about that, given your experience in this field.
Sure. So just broadly, the Income Tax Act in Canada doesn't require that a company be a resident of Canada in order to issue flow-through shares. So mechanically speaking, instead of having expenses trapped into a company with no income and therefore unusable, it allows the issuer to renounce those expenses to investors who otherwise do have income, and therefore allows the company to gain their premium. So the premium comes from that opportunity. And what the Income Tax Act requires is that the company issuing the shares be principally in the business of exploration or development of mineral projects. When they look at whether or not a company is principally in the business of exploration or development, they look at their activities around the world. So a company that has 20% mining and 80% non-mining would not qualify. But the typical mining company that we see, or the typical exploration company, is only going to have a business that's specifically mining related. And so companies in Australia, companies in England, companies in the United States can all qualify to issue flow-through shares. One of what we've noticed from Australian and offshore companies is just the structure. In Canada, usually a mining company will have their assets directly held within the structure of that company. So they're not necessarily going to have a subsidiary that owns their projects. Many of the projects are going to be owned directly by the company, which allows them to raise money and then expend it on their own property. Whereas with offshore companies, the main structure usually involves having a subsidiary that's wholly owned, that's located in the jurisdiction where exploration is happening. So Australian listed company will have a subsidiary that's wholly owned in Canada. What the Income Tax Act requires is that the issuer spends their money on a property that they own, not necessarily through subsidiary. So one of the first steps and something to put in place before you start raising funds in Canada on a flow-through basis is to firstly register with the Quebec registry, the Quebec Business Register in Quebec. And secondly, you want to have an established relationship with your subsidiary whereby you have a right to earn an interest in their property, or an option agreement or an earn-in agreement. And typically that would be structured at a non-arm's length basis. And you would provide the parent company that's listed on a foreign stock exchange like the ASX with the right to enter on the property, exclusive use of the property, the right to explore, and the right to remove minerals for the purposes of testing and assaying and review. And then once that's established, it's off to the races. And like Christian was mentioning, these flow-through finances they take 3 or 4 weeks or less to close. Generally, once they start launching, it takes about a week and a half with Australian companies. It's good to have useful or it's good to have advisors locally in Australia that can facilitate the block trade and find demand. But it's also good to have someone who's done several of these, given that just the structure itself and how ASX listed companies close financings is somewhat different than what we see in Canada. So it's good to have an ally like Christian on your side to help facilitate the trade. One other point that often gets forgotten about in Quebec, especially, Revenue Quebec, the tax authority, speaks or is insisting more and more on speaking in French, and therefore that could be one of the barriers for Australian management to have boots on the ground here in Quebec that's able to correspond directly with the tax authorities, and it's very important to have a good accounting firm here in Quebec. The filings need to be done at the both federal and provincial levels. So you have filings that need to be done monthly during a certain period and after closing of financings. And one of the main points that I see often that's sort of forgotten by foreign issuers is that Quebec, if you're not doing flow-through shares, you are entitled to credit for your exploration that you do in the province. And to the extent that you raise flow-through from non-residents of Quebec, that's going to give rise to a certain level of credits and assistance, which reduces your flow-through eligible expenditures. And it's very valuable to have an accounting firm here in Quebec that's well versed on all the mineral tax credits that are available and how it affects flow-through. And it's something that's often sort of forgotten and really needs to be emphasized.
Thanks, JP. Really interesting stuff. Obviously, lots to consider. Obviously, Winsome, you've gone through that. You've done your homework, I'm sure, and with the help of Christian and then your local advisors. Let's go. I have a couple of questions for the panel itself, and not necessarily directed, even though I'll address it to one of you. But obviously, you're all welcome to intervene if you have something to say. And again, want to remind the audience that if you have any questions, write them in the chat, and I will receive them, and we'll do my best to ask the question to our panelists. Christian, I mean, I'm going to start with you. Very inspiring to listen and talk to you about the support for mining in Australia, the funds, the institutional investors, even retail. So again, I mean, how do you explain that support in Australia?
Yeah, no, it's an interesting question there, Frank. So just from a summary perspective in terms of new issuance activity on the ASX, around $10 to $15 billion has been raised in recent years on average per year. So that is above the sort of levels that we've seen on the TSX in recent years. And there's probably a few different reasons for that. Just coming back to mining more specifically, I think we mentioned about the dedicated mining investment groups here in Australia. That's putting aside the superannuation money, which we've also discussed, but the dedicated natural resources funds are a key proponent for Australian new issuance activity in the metals and mining space. Clearly, mining is part of the DNA fabric here in Australia. So close to 50% of ASX companies by number are actually designated metals and mining companies. Now, we obviously appreciate that probably the vast majority of those companies are small cap exploration companies, but just in terms of pure numbers, close to 50% of ASX companies are actually mining companies listed here on the ASX. Now, on the broad-based numbers, as I mentioned previously, close to 30% of the total ASX market capitalisation or equity value is attributable to natural resources companies, being mining and energy companies as well. So clearly, a huge proportion of the local market here is attributable to mining and resource companies, and there is an appropriate investor set here looking at all of those sorts of opportunities as well. So it's a really interesting dynamic which has played out over the last few weeks, and once again, the support from the ASX in terms of the equity raise mechanisms have absolutely assisted ASX mining companies swiftly and efficiently raise equity to progress exploration and development strategies in recent years.
Interesting. On the flip side, Jean-Marc, over to you. How do you explain, the lack of support in Canada? What's your assessment on the issue?
Yeah, honestly, I have no perfect answer. It's very clear that in Canada, the spirit is more negative. In Australia, it's very clear that the spirit is very different. There is a very strong support from a very strong link between the financial sector and the mining industry. Saying that, in Canada, maybe I see no clear dominant factors, but rather a combination of factors. Maybe it is directly related to a misconception regarding the mining industry, which is seen as an old industry, which is a false statement, probably related to a lack of vision, a lack of confidence in the discovery potential for world-class deposits in Canada. Again, it's a totally false conception. The industry has a poor return, with many runners and few winners. It's seen as a risky, unpredictable business. An assemblage of true and false conceptions regarding the industry. There is also over-regulation, more and more regulation, which is lowering the speediness of development. And we're also competing with other investment opportunities, which have been providing short-term returns. Saying that, maybe the situation in Quebec is a little bit different. We can say that many junior explorers and even more advanced companies have benefited and are still benefiting from large-scale institutions like CDPQ, FTQ, Sidex, Desjardins. Maybe the situation is more favorable in Quebec compared to the rest of Canada. And this led us to have a more sustainable exploration activity and be able to advance some of our best projects. On the fiscal incentives in Quebec are, by comparison, seen as more favorable to the mining industry compared to the rest of Canada. But there is no clear explanation overall.
There's an interesting anecdote just in terms of the retail investor universe here in Australia as well. In terms of speculative retail, what we often find in some of the junior equity raisings that we do, a substantial portion of the book build will come from retail broker groups and retail investors more broadly. And what we've seen here in Australia is that speculative mining exploration companies probably have a bit of a stranglehold in terms of the way that retail investors look at speculative investors. We certainly haven't had the cannabis boom and bust that Canada itself had going back in years gone by. There's no listed crypto or Bitcoin industry down here at this present juncture. So certainly a lot of the risk capital from retail and high net worth investors is still designated within the ASX junior mining industry in a listed sense. So that's quite an interesting situation that we've seen play out. And if you just have a look at the volumes of some of these lithium stocks, for example, ASX lithium stocks versus TSX listed lithium stocks, you'll find that there's a distinct difference in the trading volumes between those ASX juniors and the TSX junior counterparts.
So I didn't know that there was no crypto listed companies in ASX. I knew not for cannabis, and Jean-Marc mentioned that investors had other opportunities to look at other than mining, which was not the case 15, 20 years ago. But crypto, okay, but what about tech? It's played a big role here. There's a lot of investment in new tech, the younger companies. It's not happening in Australia?
Look, there is a strong tech industry here, but over the last 2 years since COVID and sort of the market dynamic which has played out subsequently, a lot of the risk capital has flowed into mining exploration projects and listed stocks. There is a strong tech industry here, but at this point in time, equity issuance activity in tech is constrained versus the mining industry. And in terms of the speculative healthcare industry, there's certainly not that sort of industry here in Australia as we see in North America, which is why a lot of those investors focus in on the junior exploration sector.
And ironically, I think as well, that industry, the tech industry, would lament the fact that Australia has a brain drain. All of our bright young minds tend to go to the US or Europe, larger economies where there's more money available for tech than there is in Australia.
Interesting.
Absolutely. Yeah, aspiring tech companies typically want to list on the NASDAQ rather than the ASX.
Yeah. Okay. Chris, I'd like to ask you a question. I saw you react to the quotes I made at the beginning of the Globe and Mail. You reacted, in the way I hoped you would. And one of the quotes that came out in the article says, Australia has a virtual lock on the Canadian lithium industry. So what's your reaction to that statement?
I think that only tells part of the story, in that, yes, Australia produces or digs out of the ground somewhere near 50% of the world's lithium. But virtually all of that, and that's slowly changing, but virtually all of that, certainly historically, has gone to China to be converted. And so Australia is effectively at the mercy of China because it has to be converted into the final products, either lithium carbonate or lithium hydroxide, to then go into the battery. So it's number one, it's an inefficient supply chain. Number two, it makes Australia totally reliant on China and gives China ultimately a stranglehold, if not equally, then perhaps more, I think. And this is the opportunity, again, with Canada, not just in isolation, another tier one jurisdiction in which to produce lithium, but to establish a battery material supply chain, of which lithium is a very important part, of course, that sits entirely outside the sphere of China, because it's seen as a severe geopolitical risk from many countries, Canada in particular amongst them. And that's the opportunity. So it's not just lithium in isolation, because Quebec or Canada is a great place to mine lithium. It's because there's desperately a supply chain needed that's not influenced by China.
Indeed. So, Jean-Marc, I mean, we've talked about the lithium potential. Chris, obviously bringing Winsome to Quebec, believes in this potential. He just talked about it. But and Chris, I mean, you're welcome to weigh in on this too. But you've both been working in the James Bay area. You've had tremendous success. But we got some challenges, right? We have some challenges if we're going to pull this off, right? And we talked about the next world-class lithium districts, and this having the discovery is one thing, but maybe there's a whole ecosystem we need to build around it for this to happen. So Jean-Marc, I'd like to have your thoughts. I mean, what are the do's and don'ts that the regulators, the governments should be looking at if we're gonna pull this off and turn this into the next big world-class lithium district? Very big question, and I'm sure you have many things to say, but it's an important one. So I'd love to hear your thoughts, and Chris, I'd love you to weigh in on this too.
What is very interesting, we see at least 2 new emerging districts in the James Bay region. And we have at current time, we have one chance to move forward with this district. Patriot discovery with CV5, on the Adina discovery, on the Adina Galilee area. We are seeing like 2 emerging districts with an extensive potential. We're talking about at least 30 kilometers of strike lengths for the CV5 discovery, on at least an 18 to 20 kilometers at least for the Winsome discovery, extending along strike on several properties. In both cases, we foresee the potential to outline, 100 million tons. It's already done for Patriot, and probably an increase in the resource base for the Galilee area discovery. Winsome has already outlined 59 million tons at 1.12%. If we want to build a world-class district, for sure, some arrangement will be made among the different participants in that game. Some discussion will occur. With certainty, it's not an option at some point to position the district, an emerging district. We will have to see a discussion between the different participants. There is no other issue. Saying that, I think that we have the right geological context to have, in both cases, at Patriot and for Winsome, a real world-class district with much more than 100 million tons.
I think that's very. I would echo what Jean-Marc is saying there, but also I think one of the key things we need to be thinking about next as an industry is, to me, what looks like a bit of the puzzle that's missing. So in Quebec, we clearly have some world-class mines that we will be capable of digging a lot of lithium out of the ground. the Quebec government has been focusing on battery materials plants by getting all sorts of big names like Northvolt and GM and Ford and EcoPro into the Bécancour area to produce batteries. But there's a missing piece in the middle, which is lithium conversion. And I think it's not clear where everyone's lithium's coming from. It's a technical process, or a chemical process that's quite technical. And in order to counter the supply chain issues that Australia has with China, I believe we need to keep our product in Quebec to be converted. And that's our next challenge, to work out which partners are going to help us do that, and how we get the power for it, the infrastructure, and we make sure we keep the entire lithium supply chain within Quebec.
Yeah. Infrastructure, interesting. That one word, it can make all the difference, right? And so obviously, Jean-Marc, we've talked about this on many occasions. La Société du Plan Nord, the Labrador Through region, and the investment potential there. Exploring in James Bay is very costly, right? As you all know, there's a reason for that. And if you're able to put this into turn this into a mine, I presume that you would need some help from the government or from some initiatives to be taken on the infrastructure front for this to happen. So I'm not directed to Jean-Marc or Chris, any one of you who would like to start. So what do you think needs to happen on that front?
There is maybe one component which is missing to develop a long-term world-class industry. It's a railway. To move a large amount of lithium concentrate, you need an infrastructure which support transportation of concentrate. I'm not sure if a conventional road is suitable for such industry. A railway would be much better to support a long-term industry. It's our vision. But saying that, the starting point in the James Bay region is very good compared to many other regions in the world. We already have a good network of paved highway, power lines, airports. We have year-round access, even if the James Bay region is located in the mid-north of Quebec. We are benefiting from low energy cost, which is also a very competitive advantage. We are talking about hydropower, an extensive hydropower grid. And also the relationship is with the Cree First Nation is very good. Saying that, to build, complete a chain of value, the missing part is probably a railway.
Chris?
Sorry, can you remind me of the specific question again, Frank?
No, it's in terms of infrastructure, and Jean-Marc was saying that a railway, a railway could be the game changer, right?
Yeah.
Could be the game changer for this mining camp.
So I agree. Rail's a very important component. The power that Jean-Marc referred to is a lot of the infrastructure's there, but more work needs to be done on it, and there's certainly an allocation system in Quebec. And so I think to me, the infrastructure's there, but we need to harness it effectively and have constructive conversations with the government. And I think this is, I think what we need to do is speak as one voice. The Australians operating in the region, and also the TSX listed companies exploring for lithium. If we speak as one, we'll be able to harness this infrastructure from the government.
Yeah. Okay. Well, listen. I mean, obviously, still lots of. We're just at the beginning, right, Jean-Marc? As you said, this is just the beginning. Lots of exploration to do. The tremendous potential. Still have a lot of investments to be made, and lots of money to be raised, right, Christian? And
absolutely.
And I have a question actually I'd like to ask you from the audience, and this is more of a technical. So maybe either JP or Christian, you want to weigh in on this. So I'll just read. It says, so if an investor sees a flow through credit for a Quebec explorer and it isn't close to the two times premium, can that be partially interpreted that the funds won't be exclusively used for exploration, or is it likely a reflection of the investor's appetite and compared to other premiums, right, for other companies?
I'm happy to answer that question in the first instance and then hand over to JP. Just in terms of the flow through, it's a requirement that all of the funds raised through the flow through are used purely for exploration purposes with a designated time. And just in terms of the actual multiple itself, what we've seen with, let's just use an example, Quebec lithium companies, we've seen the multiple range from 1.6 to over 2 times. In recent times, and that multiple is more of a function of the supply and demand from the donor side of things rather than a preconceived multiple by the brokers or the issuer themselves. But JP might have some further insights there.
Yeah, it really depends on the metal. So if it's precious metals, the ratios are going to be much lower. If it's in different provinces, different. Given that just the provincial credits aren't the same, and therefore it's not marketed to the same entities. You'll see what we call national deals. So in the territories or in the Maritimes, be marketed to corporations. Just the numbers work, but the ratios are smaller. And even for precious metals, it really depends on the demand. If there isn't a big demand, then the ratios are going to change. If there's a big demand, the ratios are going to change depending. So. It depends on the investor appetite, depends on the donor appetite, as Christian said, and it's mostly province related and mineral related.
Okay, thanks. I have another question. Obviously, relations with First Nations. Jean-Marc, you talked about it, but Chris, maybe over to you first. I mean, what's been your experience collaborating with the Cree VU Yiche? How's that relationship been? Talk to us about it.
The Cree people, each of the Cree nations in Iuishi tend to be very commercially focused, and that's largely a function of their interactions with Hydro-Quebec spanning right back to the 70s and 80s, and so they are, and the number of mining projects that are dotted all over the province as well. So they're used to dealing with mining companies. They're used to that. Most of them have contracting organisations of some sort with which to collaborate. So mining's not a new concept for them. And there's very much because Quebec has a different relation with the First Nations, or a different treaty signed with the First Nations people than every other province in Canada. There's almost an established format for dealing with the First Nations people and striking agreements at various points along the project development cycle. But the key, like in any other jurisdiction around the world for me, is to respect the First Nations, their traditional cultures, and then bring them along on the journey. And when that's done, almost inevitably, in my experience across the world, then there's going to be a successful relationship and a successful partnership with the First Nations groups. And the Cree people are no different to that.
Couldn't agree more. If I ask you to comment the following statement, they're an excellent partner. Would you?
Absolutely. Yes.
Jean-Marc?
Yeah. Yes. In the James Bay region, Iuishi, we had the experience with 2 mines. The Eleanor mine and the Renard mine. Both are success in their relationship established with the Cree First Nation. There is also the Cree Mineral Board, which is acting very positively between the mining companies, exploration companies, and the different villages across the region. There is a fairly good understanding of our challenges as explorers, as developers. But on the Cree side, there is also a developing a very competent service industry in place. And, the explorers, the developers, and the Cree First Nation understand that working together is the best solution. And so far, it's doing very positively. We are very confident about the future of the collaboration.
Glad to hear that. I have a question from relating to we'll say M&A activity or potential M&A activity. So, and it's actually one of the questions I have prepared also for the panel. We are seeing some activity in the junior space between Australian and Canadian companies. For example, I mean, a small acquisition, but still, the acquisition of Dixie Gold by Omnia Metals Group, that happened last year during 2022. There were others. Christian, is this the beginning of something, potential M&A activity on the rise on that front?
Yeah, just from our perspective, the way we see things at this point in time, there's certainly a lot more M&A discussions which are transpiring, both from a more localised Australian perspective, but also cross-border transactions potentially between Australia and Canada. So we've completed and advised on a few cross-border Canadian and Australian transactions in the last 6 months or so, and we foresee that trend playing out over the next 6 to 12 months as well. What I would say is that the small cap resources equity market is a little bit depressed at this point in time, vis-a-vis 6 to 12 to 18 months ago. And naturally, when it is more difficult to raise equity finance for the junior mining sector, a lot of companies think a lot more strategically around M&A. And there is a general willingness from a lot of our clients to seek to build resource scale through M&A, inorganic M&A, in anticipation for a potential market recovery in due course. So a lot of those discussions are absolutely transpiring. There's a lot more M&A activity in our pipeline than there was 12 to 18 months ago. So I think this calendar year, 2024, will certainly be very busy from an M&A perspective, including elements of cross-border transactions between Australia and Canada as well.
Thanks, Christian. Chris, I'd like to go back on the First Nation collaboration because, for those of us from Canada, and from Quebec, used to working in James Bay with the Cree, who are excellent partners, obviously presuming that as miners, we do things right in our relationship with them, built on respect and trust. Yeah, I mean, you've obviously operated in Australia. There are Aboriginal people. There are obligations. So I'm curious, is there a difference between the approach from your perspective, or?
Not really. The approach is, as I say, based on the best approach, in my view, is based on mutual respect and both going along on the journey together and really seeing the development of a mining project on traditional land of the First Nations people as a partnership. So that's the foundation, no matter where you are in the world, I think. Many of the communities in Australia, the First Nations communities in which we build mines, are very remote and don't have the experience with mining companies traditionally that the Cree have. So they don't already have contracting and service organisations set up to be able to easily slot into a sort of partnership the way you might think of it happening in Iwishi. So it can be a bit more challenging, but again, it's working out what the needs of the Aboriginal people in Australia are. It's fundamentally the same thing: jobs, support for the community, and to be a partner in the process. But they mean different things in each different jurisdiction.
Mm-hmm. Interesting question from the audience. We did talk a bit about it, Chris, in terms of government support, et cetera. It says, building a North American green energy industry requires collaborations with manufacturers, supported by government initiatives and incentives. What are your thoughts on advancing this agenda?
Yes, that's very true, and I think that's along the lines of what I was referring to previously, where we need partners to help us build and build a conversion capacity in Quebec, first of all. And then ideally, we're distributing that product that's, once it's converted, into a North American or Canadian, in the first instance, battery materials supply chain. And then on top of that, we need the infrastructure as well, which we talked about earlier on, which invariably needs government support. So they are all key parts of our success going forward as an industry. And I think, as I said, speaking with one voice would really help that. There's various organisations that are set up to do this. The Canadian Institute of Mining, the Canadian Chamber of Commerce, amongst other more provincial organisations, which will help us speak to the government and industry bodies and other players in the supply chain to make sure we can all work together.
Yeah. Jean-Marc, would you like to comment on that in terms of...
Yeah, it's a very challenging period because we see a strong governmental support to develop the downstream industry, but we know that there are several missing parts to create the full value chain. I fully agree with Chris regarding the conversion capability, which is one of the missing parts of the game. And also, as we discussed, the railway, which would be extremely helpful to link a mining region to a processing region. And we hope that, and there is also a window of time which is actually favorable. We believe that we have all the parts, emerging mining region and an emerging processing region. We have now the real challenge within a reasonable time frame would be to link these two sides of the same value chain. It's challenging because the window of time can be relatively short, but we believe that the Quebec government is strongly supporting the overall creation of this value, of the chain of value.
Okay, Christian, I'm getting an interesting question, maybe a little more technical. I think, yeah, obviously directed to you. To what extent are Australian mineral companies represented in ETFs listed in North American markets? Do you know?
I think, yeah, that's quite a specific technical question. What I would say is that there is a lot of passive money that flows through to Australian listed companies. So if companies reach certain indices down here in Australia, whether that be an ASX 200 index, an ASX 300 index, or certain other indices, there is a significant flow of North American passive money, for that matter, down here into the Australian market. And that's something that we've seen specifically in certain sectors. So there's in uranium, for example, there's dedicated passive funds that directly invest in local, as in ASX listed stocks, but more broadly, there is a substantial portion of the register makeups of larger ASX listed companies made up from North American passive money.
Thanks, Christian. Getting a lot of questions. Time's flying. Listen, I'd like you, Jean-Marc and Chris, to comment this question. We've made our wish list, but we know that today we no longer have governments that makes forward-thinking decisions. As stakeholders, shouldn't we focus more on convincing on local benefits of our mines with direct contacts? And how do we do that?
I'm not sure I fully understand that question, but I think...
Or the comment. I understand it as, you know what, let's not count on governments. Jean-Marc, you were talking about people, misconception of our industry. So shouldn't we just go out there ourselves and convince the local benefits of our mines and stop waiting on government incentives and to make that happen?
In fact, it's very challenging. Of course, we're ourselves convinced about the benefit of the mining industry. Now it's very difficult to spend our time to convince people not interested to be convinced. I think really that the government should fill the gap by convincing about the key component of our wealth, provided by the mining industry. Sometimes the charge to convince people is transferred to the mining companies, and it's really not our job. Our job is to create wealth through exploration, through development, to raise the capital which is needed to develop a region. This is really our job. Our job is not to convince, the population about the benefit. Now the government should fill the gap. It's my view. It's not the same business. We're 150% of our time dedicated to advance our project in a very risky environment.
Yeah, and I also think that maybe there's a misconception with what we've been talking about. When we continually talk about the government support, we're really talking about the approvals to build the infrastructure that we need, because that's the key. We can't just go and build a power line by ourselves. We can't go and build a road without government approval, and nor can we build the mine. So ultimately, when we talk about government support for infrastructure, we're talking about getting it approved. We're the ones doing the work, and really, as far as we see, driving the design and driving the process. Now, there is government funding available for these, but we certainly wouldn't rely on it. And in terms of just convincing local populations, I think the key there is that the First Nations people, once again, if they're on board with the project and they're convinced of the local benefits that our projects are going to bring, then as in any jurisdiction, the project approvals, including those for infrastructure, just flow a lot better.
Thanks, Chris. Getting a question that actually I'm going to answer, saying I'm getting the impression that Quebec is a more mining-friendly province compared to others from a regulatory standpoint. Is that the case? Well, Chris, you certainly had some very good words to say about it. Whereas Jean-Marc talked about a regulatory environment that's a little heavy. So obviously, maybe it's a question of perception. I go back to I mentioned at the beginning of our webinar that yesterday we had the Fraser Institute come in, tell us about the annual survey, and in terms of investment attractiveness in Canada, I'd like to say that Quebec came in first, but unfortunately that's not the case. Saskatchewan came in first, but Quebec came in second. So I guess we'll be happy with that. It's still and Manitoba third, Newfoundland, Labrador fourth, Ontario fifth, and then followed by Yukon, New Brunswick, Northwest Territories, British Columbia, Alberta, Nunavut, and Nova Scotia. So there are other places in Canada where there is a good environment to do mining exploration, friendly jurisdiction, but obviously, being from Quebec and working with people like Jean-Marc and Australian companies, I can say that we have quite a good environment for miners to come in. Well, this is the end of our panel. I'd like to thank you for participating. I mentioned at the beginning, I wanted to, despite that article that kind of sparked the idea for the panel, to look at the positive aspects of this presence, of the Australian presence in Canada. I think we've discussed it, and Jean-Marc, you talked about the lithium potential similarities with Western Australia, and again, going back to the Fraser Institute. You could see the similarities when we talk about mineral potential worldwide. Western Australia comes in first, and Canada's not too far. Quebec's not too far behind. So that's mineral potential. Investment attractiveness. Western Australia and Quebec are not in the top three, but they're side by side in fourth and fifth place. So a lot of similarities between our two jurisdictions, I think, and it probably explains why we have this presence of Australian miners in Canada. I'm very happy we were able to have this talk. I hope the audience enjoyed it. I'd like just ask the panelists to stay on when we put an end to this. But I wanted to, Chris, thank you for participating, Christian, Jean-Marc, and Jean-Philippe. It was a great conversation, and I look forward to seeing all of you at the PDAC conference.